so much, because I think the communications are coming a little, probably a little late or something, or just 1 day or 2 days, so that
No, it has been mentioned in the welcome letter. The link was also shared.
All right, okay, fine. I will just recheck that information and arrange. Thank you. I think I'm good. Thanks.
All right, thanks. Thank you. Shailendra?
Good morning, everyone. Ma'am, regarding the recordings of the sessions, will these be available in LMS? And if yes, like, I mean, and can all there be some like short session on the LMS itself, because there are different sections and it's really not.
It's not actually that difficult to navigate. Maybe once you use it a couple of times, you'll get a hang of it. Because for each subject, if you enter into the course, on the left panel, you have all the links, right? So it'll give you details about your course outline, your syllabus, and then also class recording. So all you have to do is click that, and then you have the resources which will open. I'm not
Hello, hi. So currently I'm a fifth year law student. And I have completed my graduation this year.
Hello, everyone. I hope you can hear me and see me. My name is Professor Nigam, and I'm the course coordinator for the diploma in tax course. Can I first request everybody to mute themselves, please, so that there's no disturbance. I'm still hearing some echoes, so everybody should mute themselves, please, before we can start. I have. Please do let me know if you have any difficulty in hearing me or in seeing me. And in fact, if any of you, can just write on the chat box that you're able to hear me and see me, that will be great. So that we can begin. Okay, I can see that people are able to hear and see me. So great. So welcome to the tax course. My name is Professor Nigam, and we are quite excited to have all of you here at the beginning of this this tax diploma course. I'm joined here by my faculty. I can see Professor Sanyukta on the screen, and I think Professor Rahul Hemrajani is also here. This is a tax diploma course that's been structured and set up with a lot of thought behind it, some of which we will go through today with you, followed by my lecture on income tax law. So what I'll do is that I'll start sharing my screen, and we'll go through a brief orientation before we begin on our respective tax modules. So just give me a minute. I'll just share the screen for you. And again, once I share the screen, I will request one of you to please let me know if the screen is working properly so that we are able to, we are all on the same page. So just give me 1 second, please. Yeah. Yeah. So if you could just let me know that you're able to see the screen, that will be great for me, please. Okay. Okay, great. So this is the postgraduate diploma in tax law. It's taught by me and Rahul and Sanyukta. We are all professors at NLS. We are on the tax team, and we teach and research in different areas of law, including tax law. What is this course about? This is really the one reason why I'm emphasizing on the orientation is because I want to make sure that all of us are on the same page about what we are trying to do here. Just give me 1 second, please. Yeah. Yeah. What we're trying to do here is a very different approach to teaching and learning in tax law. This course is an introduction to the foundations of income tax and GST. These are two very important areas of tax law. Everyone, certainly everyone involved in any kind of commercial business transactions, either in-house or as part of a larger commercial setup, or as a practitioner, or as a student, either of accounting or of tax or of law, has to learn the basics of income tax and GST. And income tax and GST have been taught in various ways across various domains. Chartered accountants teach it, cost accountants teach it, law schools teach it. But what's important is the kind of pedagogical approach that we are trying to bring to this area. And this is what I need to spend a little bit of time with you before we start this course. What we're trying to do really in teaching income tax and GST is to bring to the world outside of NLS the approaches that we have adopted in NLS classrooms and in our courses. As you all know, the National Law School was founded in the late 1980s to be a trendsetter in legal education, and it adopted various new innovative strategies in learning and teaching.
Hello, hello, hello.
But it's sorry, may I request participants to mute themselves, please, so that we are not disturbed. As we all know, the NLS was founded in the late 1980s to try and see how it can contribute in an innovative fashion to learning and teaching. And it's something that has progressed and sustained itself over the last 35, 40 years. And we're trying to bring that same approach to the outside world as well. And what that means concretely is that whatever we do is conceptual in the sense that when we teach something in the class, we're not teaching just section numbers of the income tax statute or just the bullet points of what tax is about, but we're trying to bring a structure to the teaching of tax law that enables students to understand the foundations of the subject they're teaching. Tax law is a particularly dynamic area in law. It changes every year. I think in another 5 years, what you see today in the Tax Act will be unrecognizable from what it was 5 years ago. And what's really important and what we feel very strongly about is that we must focus on the conceptual features of law. And we'll see when I teach my first class today, and then when you go through classes by Sanyukta and Mr. Hemrajani, that that's what we are trying to emphasize on. We do that through a case method. There are cases with real life practical problems in the field, and we approach our teaching by teaching these conceptual ideas through cases that have actually come up in courts at various levels, either at the level of the Income Tax Appellate Tribunal for income tax, or at the High Court or Supreme Court level. Our analysis is necessarily comparative. It is comparative because the Indian tax legislation, much like its counterparts in other areas of the law, have been inspired by and borrowed from the English legal system. In fact, the Indian Income Tax Act 1961 was based on the Indian Income Tax 1921, which itself was based on the British tax legislation at that point of time. So we do adopt a comparative approach where we lay bare these English structural foundations of statutes. For example, I'm just talking about income tax law, but we can think about similar things in GST as well. And we also discuss cases in other jurisdictions. We believe that a comparative analysis enriches our domestic approaches to tax law and adds to our pedagogy. Everything that we do involves some critical inquiries. This is in another way in which we're different from how other people teach tax law. We try to position tax law in terms of the principles and ideas, both moral, economic, and ethical, that animate this area. And we try to figure out if tax law lives up to its own aspirations. In doing so, we believe once again that it will enrich our understanding of tax legislation, either direct or indirect. Finally, we adopt a global perspective on our teaching of tax law, by which we mean two things. One, that we have already noted, that we look at other jurisdictions and how these tax controversies have arisen there and how they've been resolved. But also, we notice the increasing international aspects of commercial transactions in India, and we want to see how tax law approaches these kind of issues at a global scale. For income tax law, for example, we have a component on international tax, which is about foreign investment in India and Indian investment abroad, and how that is dealt with in the Indian tax system. I've written a short book on international tax, which is also prescribed for you, where I've delved into these issues. Similarly, GST is increasingly um, engaging with international affairs, issues that are foundational to GST. For example, the idea of export, the idea of intermediaries, the idea of place of supply, are issues that now have a global significance because of India's participation in world trade. So these are the ways in which our course is different. It's conceptual, case method oriented, comparative, contains at every stage some critical inquiries, and adopts a global perspective. In India, there is no equivalent to this course. In India, tax law is simply not taught in this manner at all.
Okay.
Tax law is either taught in
Oh,
in accounting frameworks,
password will
within
be
those
your
accounting frameworks.
this thing na login
Can I
the email ID which you have put and the password होगा. If you have not forgot the
can I
password, then
please
reset it immediately. वो हो जाता है. Email आएगा. You have to
can I please
reset.
request people to mute themselves, please? It's coming in the way. And we in India, it's either taught in within accounting frameworks, or is it taught as a section by section analysis of tax legislation. We believe that doesn't add to either knowledge or understanding of how tax law is taught, and so we have adopted this approach. I must uh, end this part of my talk. I'm going to continue on with other things that I want to talk to you about the course. But this part of the talk, I want to end by saying it's challenging. It's not easy. Um, it's rigorous, and we expect nothing less from our students. This may be an online executive-oriented course designed towards professionals, but that doesn't make it any less rigorous. We adopt the same approach that we adopt towards our students, and we have the same standards, we have the same aspirations that we have our students. So it's important to us that we develop this common understanding on this first day of the course, that we are going to be teaching something that is exciting, innovative, interesting on the one hand, but it is quite demanding, challenging, and takes a bit of your time and effort in for you to come and engage with us. It requires two things which are very important, and this is something that our students sometimes do not appreciate and later regret. The first thing is that we expect our students to read. So we have each of us teaching on this course has case materials, has supporting documents. We expect you to read these things. If you don't read these supporting documents and these cases, you will not be able to benefit from this course. Second thing is that we expect you to engage with us in the class. We are teachers who have had years of teaching in NLS classrooms. We believe that interaction with our students is at the heart of our pedagogy. We want you to come to classes, engage with us, talk to us, respond to us. If you don't do that, you're not going to be getting the full benefit of the course. This is not a course where we are all just video boxes at each of our ends. This is a course where we believe that our pedagogical approaches work best when you work hard and engage with us. So please keep these two things in mind. They're also in some ways dovetailed with your assessments, in the sense that if you read the materials we have asked you to read, and if you engage with us, you will do very well in your assessments. On the other hand, if you don't, you will struggle. So it's really important that you keep this in mind. Moving on, the hours of engagement, we have teaching 32 hours over 9 months, and there are going to be office hours 1 hour per month. The teaching is distributed in the modules that you have already been assigned. I will be teaching you income tax. Uh, Sanyukta will be teaching you indirect tax, including GST, and Rahul will be teaching you the foundations of tax. And each of us will be engaging with you 32 hours over 9 months. The papers are Introduction to Law and Legal Systems, which is a common paper for anyone who takes a diploma course at NLS, followed by 3 tax specific courses: Fundamentals of Taxation, taught by Rahul, Principles of Direct Taxation, taught by me, and Principles of Indirect Taxation, taught by Sanyukta. These 3 papers are introductory in character, in the sense that they teach the foundations of each of those domains, but merely because they're introductory doesn't mean that they're not either complicated or rigorous. You will find that they are complicated and rigorous, but it is taught at a level that anyone who has a keen interest, who's willing to put in some work, and who's willing to engage will be able to take advantage of and flourish in these courses. Details of courses: Introduction to Law and Legal Systems gives everyone some idea about the basic foundations of law and legal reasoning. Introduction to the idea of legislation, how does it regulate conduct, the idea of cases and precedents, and how they add and subtract from legal knowledge. The fundamentals of taxation, which is taught by Rahul, will give you an overall framework on approaches to taxation, followed by the 2 courses of indirect tax and indirect tax that will delve into the more detailing of what these tax domains are. For example, in the case of direct taxation, we will start with the idea of income and proceed to talk about salaries, property income, capital gains, corporate and business income, and international tax and tax avoidance. In the case of indirect tax, similarly, we will start with the foundations of, say, I'll take an area like GST, talking about supplies, definition of supplies, what supplies entail, followed by an inquiry into surrounding concepts like consideration and business, followed by um, things that apply both within state borders and interstate borders that include concepts like place of supply and place of supplier, and some international or global tax issues that arise in GST. Your class timetable has been provided to you, and I urge you at this early stage to take these timetables seriously, to attend these classes. You are being provided an education that is of the same sort, with the same pedagogical objectives that we find in our NLS classrooms, and we expect you to take full advantage of that opportunity given to you. It's up to you to do that, and it's really important that you take advantage of that. We have 2 classes in September and 2 classes in October and so forth. The timetable will mention on what dates these classes are and on the dates that you will not have classes because of something or the other. And you will have 2 kinds of assessments. You will have a formative assessment and a summative assessment. And the formative assessment is usually quite objective type and multiple choice, and the summative assessment has an essay component to it. These formative assessments and summative assessments test your knowledge and your ability to analyze tax issues and your ability to apply what we have taught to you to some practical situations. These kind of assessment exercises are meant to capture what skills and knowledge that you have developed through these courses, and therefore it's important that you take the actual coursework and teaching very seriously throughout the trimester. I think that's it from me. I'm going to, I mean, you can ask me questions in the chat box, or if you want to raise your hand and I can call on you. I'm just going to close this broadcast right now, and I'll come back to the main platform, and I can answer any questions you have or anything that you want to talk about. Just give me a second, please. Yes, so I'm back. Let me see if there's anything in the chat box that that I need to answer. Right. Okay. Yes, and does anybody else have any question? I don't see anything right now here. Yeah. Yes, so I have a question on where to download the class materials in today's slide. You can download materials on LMS. Instructions will be given to you by the PACE team, and we'll put up all the slides quite quickly, so you'll have access to all the slides on the LMS as well. WhatsApp groups and all of those kind of things, we don't deal with all that. I mean, if you want to create a WhatsApp group, you can go ahead and organize it among yourselves. We are not going to be involved in that. Okay. All right. I think that is the end of the orientation. Just one second. I had another question. No, it says, so the question is, that if somebody does not have knowledge of taxation, will that be a problem? That will not be a problem. This course will not assume any prior knowledge of tax law, either income tax or GST. And that's why we have an introduction to law and legal systems, and we have a foundations of tax course as well. We don't have that problem. I'll tell you what we have assumed, though. We have assumed that you have not just an interest, but also an inclination to delve into an area of law that you're not familiar with and that you want to work hard at. As long as that assumption of mine is redeemed by you, you should be perfectly fine. So just wanted to let you know, some of you may not be aware of this, and some of you may have joined late. I'm Professor Nigam. I'm joined here by Professor Sanyukta and Professor Rahul Hindrajani, and we teach tax law at the National Law School. And what we are trying to do in this course is trying to bring you the same excitement and energy that we have in our classrooms to a group outside of the National Law School. But that requires a certain level of commitment and a certain level of rigor from our students. And we hope we are able to get that. If you are able to do that, there's nothing like it. We'll have a great time on this course.
Professor Nigam, I have a question.
So you have to raise your hand before you start asking questions, because otherwise, raise your hand virtually. I mean, otherwise it'll be chaos. Yeah, is it? I see one hand,
Okay.
which is it Tanmay? I see one. Somebody called Tanmay has raised his hand. Yes, please, Tanmay. Yes, go
Yes,
ahead.
yes. Can you hear me, sir?
Yes, I can hear you. Go ahead.
Can you hear me, sir?
Yes,
sir, your
I
income
can.
tax, classes will be covering the new income tax code as well, the basics about it.
Very good question. Very good question. Yes. So now we are all in a peculiar state where we have a new income tax act that is going to be operational from next year, from April 1st of next year. It's not a it's not a problem for this class because we are dealing with tax issues in a conceptual and principled way, and those principles and concepts will not change. The new income tax act doesn't change that at all. The new income tax act changes the section numbers in some cases and the arrangement of sections in other cases. What we're going to be doing is we're going to continue with the Indian Income Tax Act 1961 because that's what's applicable right now. But while I'm doing that, I'll be telling you, and you should note down the new section numbers that the Income Tax Act 25 will come in, which is applicable from next year. And in some cases, not in all cases, only in a few cases, there are a few slight changes that the Income Tax Act has made. And I will be telling you about that as and when I'm talking about the present provisions of the Income Tax 61. This is the life of a student who is in this kind of liminal stage, midway stage, where the new act has not come in yet, but the old act has got about a year to live. So we'll have to manage that. It's not a big problem for our course because our course is foundational and conceptual, but we will be telling you about those. In the income tax course, we'll be telling you about the new numbers. Yeah.
Okay. Thank you, sir.
Yeah.
Thank you, sir.
Okay, I think we're all set. So what I'll do now is I'll take a 5-minute break and come back. The orientation is over. And when I come back after 5 minutes, I will start with the income tax course, right? So people stay on this platform, come back in 5 minutes, and we will be starting with the in first class of the income tax course in 5 minutes. Thank you to Sanjukta and Rahul who came for the orientation, and you will, of course, be hearing them soon as well in their respective classes. Thank you, and I'll see you all in 5 minutes' time. Okay, so good morning, everybody, and we're back here. And this part of the session is going to be about an introduction to income tax. As we know, this is the income tax course. It starts from the very foundations of income tax, and it builds it up to a level where you'll have a good understanding of the conceptual underpinnings of the Income Tax Act. The Income Tax Act is of long standing. I said it was in the 20s that we had the first version, then we had the second version in the 1960s, and then now we have the third version in 2025. And it has gone through various iterations, but there are certain principles that have stayed the same throughout these iterations, and it'll be interesting for us to understand what those principles are. So as usual, I'll start off with making a presentation, and I'll also ask you to think a little bit about what we're doing today, and then we'll see how it goes. Just give me 1 second, please, while I start the presentation. Okay, we are here. We are doing the presentation as usual. Someone can let us know that you can see me, and or if you can't see me, at least you can hear me, and so that I am aware that nobody is missing out on the lecture. And if somebody has any issues with sound or video, uh, or the slides, please do let me know in the chat box, and I'll be able to get somebody to remedy that for you. Okay. So what is this course about? It's about the basics of income tax. We will begin with concepts of income tax, followed by idea of income. What is salary? What is business income? What are the differences between revenue and capital expenditure? What is capital gain? What are income from other sources? Trusts and tax treatment of losses, double taxation, international taxation and transfer pricing, and finally, tax avoidance and the GAR. As is evident for some of you who may not be familiar with tax, many of these words and phrases you might have read in newspapers or seen them in social media or heard people talk about it during budget time. But these are something that may still be unfamiliar to you, and therefore we will go through each one of these issues in more detail in the course. So at the end of this course on income tax, you should have a good idea of all of these basic structural features of tax. So tax, as we know, is a compulsory exaction of money by public authorities for public purposes, enforceable by law, and is not a payment for services rendered. Right? And as you can see on this slide, sorry, 1 second, please. Yeah. As you can see on this slide, there are various conceptual elements of tax law that have to be studied and are there in the features of any tax legislation, including the Indian tax legislation. Those features, I'll just note them at this point of time for you, but they are something that you will not be familiar with until we actually have dealt into the foundations of tax law in some more detail. They are, and I'm just going to ask you to take a look at this table. Should probably make this. Yeah. They are the scheduler system, the idea of a separate legal personality, the idea of self-dealing, timing issues, issues of source, issues of residence, some issues relating to ownership, to distribution, to losses, to expenditure, and avoidance. Once again, these are terms that you might have heard of, but you may not have spent much time on it. And we will spend some time on each one of these ideas in our tax course. We'll begin with what is income. And for that, we'll ask you to take a look at question 1 of note 1. And this brings me to an important point about the way I teach the course. I teach the course through PowerPoint presentations because that's the mode through which we can teach you online. But I also expect you to take a very close look at the reading material that I have prepared for you, the course materials that I have prepared for you. And those course materials are on your LMS. I want you to make sure that you are reading those course materials in a careful fashion. And in almost every class of mine, I'll expect you to refer to that course material and answer questions. So, for example, this is an opportunity for me to do that. For example, I'm now asking you here to look at question 1 of note 1. It's a problem question in note 1 and it comes on page 3. And I'm going to ask you to answer question after reading that problem. Can I get somebody please to tell me that you have access to this problem question note 1 in our course materials? Can somebody please confirm that please for me? Unfortunately, I'm have to toggle between the slide and your chat session, so you have to give me a little bit of time while I do that. So I'm waiting for somebody to let me know that they have access to the course materials and that they're able to look at question number 1 in great. So I have received confirmation. And for those who, there may be some of you who don't have it, just for their benefit, let me just tell you what the problem question is. This problem question that I'm going to talk about now is a question that introduces you to the foundational aspects of income, right? So we are here talking about what is income, and this introduces you to that foundational aspect. An individual resident in India, goes to a cricket game in Bangalore in which a famous cricketer is playing his last game. The winning runs are scored by the retiring cricketer by hitting a six, and the cricket ball happens to land in A's hands. A sells it on sportsworld.com, an online portal with a server based in Cayman Islands, to B, a UK resident who specializes in selling memorabilia for £1,000. After 2 months, B sells the cricket ball to C, another UK resident, for £2,000. Is the amount received by A subject to taxation under the Income Tax Act? Is the amount received by B subject to taxation under the ITA? Consider all possible controversies arising out of this. Right? And this is in note 1, problem question. And the problem question, you will find it on page 3 of your course materials. And if you go to your note 1, problem question, you will find that the problem question is followed by some sections and some excerpts from some sections. What I want you to do now is to look at this problem question again. The problem question is in two paragraphs. I've only referred to the first paragraph, and please only take a look at the first paragraph and then come back to me. I'm going to give you 5 minutes. Don't Google, don't do all those kind of stuff. Just read this first paragraph, come back to me. I'll come back in 5 minutes and I'll ask you, how would you approach the facts in the first paragraph for you to identify them? Yeah, so I'll come back to you in 5 minutes time. Please, I need some potential answers. This is a teaching session, so it's, you don't have to worry about wrong answers or going completely off track. Don't worry about all those kind of things. This is a, what we're trying to do here is to engage with you and learn through that engagement. Yep. Thank you. So please look at that question one of note one, please. Five minutes. And then after 5 minutes, you can either write in the chat box or you can raise your hand digitally and I can call on you. Yeah, can you hear me now? Please let me know. Okay. Okay, great. So I don't I don't know how much I don't know how much of what I said was lost. So let me repeat this for you. What I was interested to know from you people is that a lot of you focused on the transactions between A and B, and we're talking about tax, about the tax implications of those transactions. Please remember that we are in an income tax course. The first thing we're trying to ask is um, what is income and how is it taxed, right? That's a question that we are trying to ask here. Let me ask you something very foundational, which is that when I said that the winning runs were scored by a retiring cricketer by hitting a six, and the cricket ball happened to land in A's hands. Forget about anything else that happens after that. Why is A not being taxed on the cricket ball landing in his hands? Why can't there be an income tax on that? If any of you, I think this is somebody, Rahul has raised his hand. Yes, Rahul, do you want to speak?
So because income is not generated at that moment.
And why do you think income is not generated at that moment?
Because he's not sold the item. Right now it's worthless unless he puts a value to it.
Yeah, I think it's important to understand that somebody can have an increase in wealth, and that increase in wealth need not be only in cash or only in monetary value. Suppose I give you, instead of a cricket ball, if you're employed, suppose you're employed somewhere, and that employer gives you, instead of a cricket ball, gives you a gold watch. Surely your wealth is increased. He's not given you money yet, but he has given you a gold watch. Surely at that point of time, you can't deny the fact your wealth has increased and that you've earned something. Right? The question is whether what you earned is income or not. And income, here we come to the most important question about income tax, which is what is the subject matter of tax? And um, the debate about the subject matter of tax must start with the definition of income. Okay? And income is defined in a, we haven't given you the definition right now, but you can refer to it later. Income is defined very widely in Section 2 of the Income Tax Act, and is defined as inclusive. It is an inclusive definition. It says income includes, and then it takes you through a variety of items. And that can include not just cash or money, but anything that is of value, and by value, which means something that can be convertible into money, something that's convertible. And so that's the first thing I wanted you people to think about. If you just receive, a cricket ball in your hands, then does that mean that you're subject to income under the Income Tax Act? Um, uh, Yash, are you able to hear me now? I see that you said my voice is low. Can you just let me know if it's okay now? Okay, great. So that's the first thing I want you people to think about, right? And if you notice, if you go to note 1, um, and I've given you that problem question, and if you just scroll down, you will see that the way in which we need to answer these questions is we begin with Section 4 of the Income Tax Act. In the new act also it's Section 4, but a little bit, there's a slight change in language. We can talk about that a bit later. Right now, the section before you is Section 4, which is the charge of income tax, which is from the Income Tax Act 1961, the current Income Tax Act. And it says that where any central act enacts that income tax shall be chargeable for any assessment year at any rate or rates, income tax at that rate or those rates shall be charged for that year in accordance with and subject to the provisions of including provisions for the levy of additional income tax of this act in respect of the total income of the previous year of every person. And you don't have to worry about clause 2 for the time being. It's very interesting that section 4 says where any central act enacts. By that we usually mean a finance act, which is there during budget time. So where any finance act enacts, that income tax shall be charged for any assessment year. Assessment years are usually annual periods. At any rate or rates, income tax at that rate or those rates shall be charged for that year, right? And the word income has not been defined here in section 4, which is a charging section. It's been defined elsewhere in section 2, and section 2 has not been given to you in this note 1, but it appears in note 2, which begins from page 5, and it goes, you will see it. You just scroll down on that. You will see, I'll just give you the it comes on page 15 of your course material, page 15, 1-5, and says that the term income has been defined in the Act in section 2, clause 24. Usually, definitions begin with a description, but the drafters apparently found it hard, with good reason, to provide for an adequate description of income. Instead, income has been defined as including a number of enumerated items, such as profit and gains, dividend, value of perks, capital gains, winning from lotteries, and sums received under insurance policies. And those are just specific items. In it, it's an inclusive definition. By inclusive definition, it means that it is not restricted only to those items mentioned in the definition, and therefore anything of value and can be considered, anything that you receive which is of value can be considered as income. And so if you are sitting in a stadium and you get that cricket ball landing in your lap, there's no reason why the income tax authorities might say that this is not income. Clearly that cricket ball is valuable. It's not just a cricket ball, although even cricket balls have value. It's not just a cricket ball, it's a cricket ball that is hit by a person who is retiring, and so it has some nostalgic value, and therefore it may actually be easily convertible into quite a substantial sum of money. And there's one problem though, which is that even if you think it's income, because it's something that you received of value, it may still not be subject to tax under the Income Tax Act. Anybody wants to tell me why that might be an issue? So let me repeat this question. It's slightly subtle, and some of you might find it difficult to grasp. My question is: you're sitting in a stadium. Somebody hits a ball for a 6. It lands in your lap. That ball, leather ball, is actually quite valuable. It's not merely a leather ball; it's of nostalgic value. It can acquire quite a substantial sum of money in the market, and even then, there may be some issue about it being taxable under the Income Tax Act. Why is that? Does anyone want to have a question? So one answer I'm receiving is maybe he got it not in the process of business or profession. That's from somebody called Shiva. But why does that matter, Shiva? Why should that matter? Why should it matter whether he received it in the process of
Sure.
business or profession?
So what?
Yes.
Just I apply
Go
my
ahead.
logic. I apply my logic, sir.
Yes.
So on there, if you find something, it may be attractive, so that we just got maybe a flower. If we get some flower
Yes.
while we going for a walking, so certainly we got some flower. If it is sold in the market, it has at least 1 rupee value. That is sure. But we are not in the process of selling. It is we are not intending to sell it, sir. We are not in that is my logic, sir.
But even
Oh,
then,
he may
even then,
be he
even
may
then you got
yes,
something
sir.
of value though, right? Even then you got something of value. It is valuable. It can be converted into money. As long as, as I said, Section 2, Clause 24 of the Income Tax Act is very clear. Income includes various items of value, not just money. So, so why not? There may be some other issue here that you may want to. Somebody has said he has not made any money out of it. Doesn't matter. It's still you may not have converted it into money, but it's still valuable because it's convertible. It is capable of being converted into money. But it is made of that person who said this, that he has not made any money out of it, has also raised a good point, which is that what's he's looking at why is it valuable? Because it has some value, some monetary value, and as I said, the Income Tax Act does not make a distinction between cash and other items of value. As long as there's monetary value, that should be okay. This is an unknown user who has said something really important, and I'm happy. He has said, perhaps the cricket ball landing in your lap does not fit under an income head under India's scheduler system, despite it having monetary value, and that is actually the right answer. Yeah, that's a very good answer. I don't know who this unknown user is, but hopefully we'll be able to hear him or her at some point of time. Okay, his name is Dutt, he says. Very good. Good, Dutt. So he let me explain this for the rest of the students. I find this concept, by the way, I've been teaching tax for what 30 years now, and I find this concept even today of some interest and somewhat puzzling, right? Here's how it is. The way the Income Tax Act is structured, the Income Tax Act 1961 and the Income Tax Act 2025 is structured the same way, is that there is a tax, as you could see in Section 4, on income, right? It says where any central tax, which is basically the Finance Act, enacts that the certain income will be taxed at a certain rate, then there'll be an income tax. That's not the end of the question, though, because Section 4, both under the 61 Act and under the new Act, both of them, if you just scroll back to Section 4 in your notes, you will notice in your course materials, if you notice, and I'm just going to ask you to do that, it's on page 3, Section 4, Clause 1, states that subject to the provisions of this Act, where any central act enacts that income tax will be charged for an assessment year at so and so rates, income tax will be charged in respect of the total income, not just income, total income of the previous year of every person. And total income in Section 2, Clause 45 is the total amount of income referred to in Section 5 computed in the manner laid on this Act. Could you please mute yourself, please? Yeah. And Section 5 says that Section 5 says scope of total income, and then it gives you some answer. But what's important for the time being is Section 14, which is heads of income, which is save as otherwise provided by this Act, all income shall, for the purposes of the charge of income tax and the computation of total income, be classified under the following heads of income: salaries, income from house property, profit and gains of business or profession, capital gains, income from other sources. And the way the Income Tax Act is structured is to say, therefore, that it's not just income that's taxable, that when you receive income, that income must come under one of the 5 heads, either salaries or income from house property, or profits and gains of business or profession, or capital gains, or income from other sources. It must have one of these sources of income. By heads, we mean sources. It must come from other sources of income, right? And so, even if you receive something valuable, if you're able to say, as Dutt said, that the cricket ball that lands in your lap, doesn't really have any source. The retired cricketer is not a source of income. God is not a source of income so far. You just got it. You just got something valuable. That doesn't mean that you have received income for the purposes of the Income Tax Act. The Income Tax Act classifies all income under schedules or heads of income, which are basically mean sources of income. And you must identify which head of income that income falls under. If you can't identify a head of income, that income is not taxable under the Income Tax Act, regardless of the fact that it is valuable. Right? So that's the first thing that I wanted you people to think about. What is income? And in the Income Tax Act, income is defined in a very wide manner, anything that's valuable, but you must be able to place it within one of the 5 schedules of the Income Tax Act. Right? So this is the first thing that I wanted you people think about carefully before you we go on. Now, what I'm going to do is I'm going to go back to the slides that I was presenting, and I'm going to say a few more things, and then we'll come back to some other issues that you were talking about. So what is income? Can receiving the ball be considered as an income? Any increase in wealth is prima facie income, but we must be able to understand that it must have a source, or it must come under a particular head of income, and only then it can be taxed. Section 4 says charge of income tax, talks about previous year and assessment year. Income earned in a year is taxable in the next year. The year in which income is earned is known as previous year. The next year in which income is taxable is known as the assessment year. This is the 1961 Act, Section 4. The 2025 Act, Section 4, same section number, which is applicable from next year, has done away with the ideas of previous year and assessment year and just uses the simple word tax year, which is a tax year is a financial year, April 1 to March 31st. And so we're not going to spend too much time on the differences between previous and assessment year. Those concepts now have been done away with under the Act, and we are just saying tax that is chargeable for a year, an annual period, beginning from April 1st, ending on March 31st. And the tax is charged on the income earned during that period. Sections that we should focus on are Section 2, Clause 45, which talks about total income. Section 5, which we'll deal with in 1 second, which talks about scope of total income. And Section 14, which mentions that income that is chargeable under the Act has to be charged under one head or the other. And it talks about various heads of income. Computational basis is that under each one of these heads, income is computed differently, and therefore you have a schedular system of taxation to go by. Now we talk about the schedular system in a slightly more detail, and then I want to tell you something else. The schedular system, when we say the income tax account is just give me 1 second, please. Sorry. When we talk about the schedular system being the tax being schedular in character, what it means is we are asking the question, what has the person earned or received under the particular schedule? Each schedule has its own computational system. The income should come under heads or schedule. Since it's a computational character, since income is computed under each of the schedules, the income needs to be definitive in nature. We need to figure out precisely how much a person has earned under the head salaries, or under the head profit or business of income, or under the head capital gains, etc. exemptions or deductions, all of them are scheduler in nature and they fall under specific heads. We go back to my question, which is look at question 1 of note 1, in which we had stated that this person who goes to the cricket match, he receives um, a cricket ball, but even though it's of value, unless you're able to fit it into a particular schedule, it won't be considered as income for Income Tax Act. But then what he does with that ball is he sells it on sportsworld.com, an online portal with a server based in Cayman Islands, to B, who is a UK resident, and he sells it for a certain amount of money. Now the question is, what would you think of that income? Is that income at all when he sells it? First question, then we need to understand in answering that question is, why should A be taxed at all? Let's assume that what A is doing here is he's making a profit out of some sale, right? First question we should ask ourselves is, on what basis is A taxable? I'm going to close my broadcast again, and I'm going to come back to that question for you, which is, why should we tax A at all? And let's see, can anyone answer that question? Now we're not on the question of what has happened to A when he receives the cricket ball. That's not the question I'm asking. Now I'm asking a second question, which is, A then receives the cricket ball and then he sells it to B, right? Now, on what basis will A be taxed, or will A be taxed at all? That's the question I'm asking the audience. Yeah, anyone wants to answer that question? You can either put in the chat box or you can raise your hand. Yes, so I got Chakradhar. Chakradhar, do you want to say something? Yeah.
Good morning, sir. Sir,
Good
it's
morning.
a short-term capital gain, and tax is not charged on capital
No.
gain.
Chakradhar, you've gone, if this is a video game, you've gone to level 3. Hold on. We're not talking about, I don't even know what short term is or what capital gain is. You tell me something even more simpler. Let's keep it very simple. Suppose I ask you, Chakradhar,
Yes, sir.
A has sold this cricket ball to B. And I ask you, tell me one section that tells me why I should tax it. What would your answer be? This is good.
That
This
is
is
income.
step by step. No, only Chakrada for the time being, please. Only Chakrada. Yeah. Yes, please.
Sir, you are not audible. Can you repeat it, sir, again?
Oh, sorry. Yeah, you can hear me now, Chakrada?
Yes, sir. Yes, sir.
So here's my question for you. A has received the ball in the stadium. We're not worried about what happened to that. I think we are now saying, no, we're not sure what head of income it is, so it's not taxable. But A then goes and sells it on this online platform to B. At this point of time, the income tax authorities come to you and say that there is a tax. How will you answer them? They have to always provide a section, no? Some section they have to provide to tell you that it's a tax. What section would they talk about?
So they would be first they would be considering whether it will fall under the income tax or not. So section
Yes.
4 has to be read in detail. So would
Yes.
it be as a business income or a personal income, or if the income is generated through house or property? So
Yes.
if we consider this
Excellent.
situation, sir, it would be considered as a business income since he's selling the product.
But Chakrada, he's you and me. I'm a salaried. I don't know what you're doing, but I'm a salaried employee. I'm employed by the National Law School, and so I'm not in business. I'm just receiving a cricket ball and I'm selling it. Um, how can that be a problem in terms of how can that be considered a business income, right? So this is but Chakra, thank you for, I'll just move on. Thank you for providing that answer, because that's a very good way of analyzing it. We start, whenever there's an income tax issue, we start with that basic question. What does Section 4 say? Section 4 says income tax is, there's a tax on income, but it's with respect to total income. Then we ask ourselves, what is total income? Total income says total income means whatever is taxed under Section 5, read with other sections of the Act. And then we ask ourselves, okay, Section 5 says something, we'll come to that. But when it says computed in the manner laid on the Act, we go to Section 14 and we need to identify a head of income under which it's taxed. Then we say, as Chakrada was trying to say, we have to analyze what a head of income must be, and it's certainly not a salary, it's certainly not income from house property, could be income from business, but the A may not be in business, could be capital gains in the sense that A has received an asset and then has transferred that asset to somebody else for profit. So it could be capital asset, or it could be income from other sources. We don't know. We don't have to worry about that right now. But we'll have to. But what we are trying to do right now is to say that there has to be a source, a head under which you tax this. Let's assume that there's a head. Let's assume, for just to make it simple for all of us, that this is a case of capital gains. A has received a cricket ball. That's a capital asset. It's a property, and he has transferred it. Right? And when we come to capital gains head later on in this tax course, we'll talk about what a property is, what an asset is, what capital gains is, and all that in more detail. But let's just to get the discussion going, let's assume that this is capital gains. It could be income from other sources, but let's assume it's income from it's a capital gain. That ends the matter. Are we done? That is, now we know this is income because it's something that's valuable. He has received cash in return for transferring the cricket ball. We are able to identify a head of income. Say it's capital gains or income from other sources. That's the end of the matter, or do we need to think of something more, my dear students, in addition to this question? We have looked at Section 4. We have looked at Section 14. This is income. It's income from a particular source. Is there anything else that we need to think about? Anyone? Either you can raise your hand or you can chat. You can put in the chat box, and I'll catch it up. Priyanshu has said Section 4 and Section 5, but what does that mean? Yeah, Section 4 we are already done. Why is Section 5 important? What is Section 5 doing? And why is it important? I thought somebody had raised their hands. Let me see. So, yes, so an unknown user has said that he is a resident of India. Vivek has said, can the acquisition of ball be considered as self-generated goodwill? Don't worry about goodwill at this point of time. Vivek will not go into that right now. But yes, A is a resident of India is correct. That's important. It's because A is a resident of India that India is able to tax it in this situation. And that idea is captured in Section 5. Now I'm going to read out Section 5 now. It talks about scope of total income. Section 5 says, this is Section 5 of the 1961 Act. It's a similar provision in the 2025 Act as well. Section 5 says, subject to the provisions of this Act, the total income of any previous year of a person who is a resident, please take this note of this, resident, includes all income from whatever source derived, which is received in India, or accrues, that is arises in India, or accrues arises to him outside India. Whereas clause 2 says, subject to the provisions of this Act, the total income of any previous year of a person who is a non-resident includes all income from whatever source derived, which is received or deemed to be received in India, or accrues or arises or is deemed to arise to him in India during such year. So my friends, this is the second important point in addition to the definition of tax that I want you people to understand. A person earning income is taxed because that person is earning income, and that income comes under a certain head of income. But that's not the end of the matter. India has to have jurisdiction over that person. It's not a question of just income recognition. In every time Income Tax Act is applied, there are multiple questions that we ask. We ask first a question whether income is recognized at all. Second question we ask is whether India has jurisdiction with respect to that taxation of income. And there you have to come to section 5, which says that for residents, your worldwide income is taxed. It doesn't matter where you receive your income, doesn't matter where you earn your income. The words accrue and arise, Shiva has asked a question. What does that mean? It means basically where is it sourced? What is the source of this income? And for residents under section 5, both under the current act and under the new act, their global income, doesn't matter where the source is, the global income is taxed. For non-residents, only income that is sourced in India or is received in India is taxed. This is an important distinction because in the facts that I gave you, A was a UK resident. It does not, A was an Indian resident. It does not matter to the Income Tax Act whether A is selling it through an online portal that is in Cayman Islands. It doesn't matter that he's selling it to a foreigner because A is a resident on that basis alone. As long as what he's earning is income, he's going to be taxed in India by the Indian government. So somebody has written here that no tax will be charged to A, income is generated in Cayman Islands, no tax is charged in India. That's for Indian residents, it doesn't matter. If you're a non-resident, it matters. For Indian resident, as long as you're a resident in India, you'll be charged on income wherever it is sourced, whether it is in India or whether it arises outside India. So that's the other important point that I want to tell you. Now, what I want you to do is, and you see in the facts of this case, I've said that A sells it on sportsworld.com, an online portal with a server based in Cayman Islands, to B. Doesn't matter if server is based in Cayman Islands. We're talking about the taxability of A, who is an Indian resident. But then what he does is that B then sells a cricket ball to C, another UK resident, for 2,000 pounds. What happens to the tax here? Anyone wants to answer that, please? Raise your hands or the chat box. Anybody wants to answer that? I'm on to this question now. We have finished answering the question, what happens when A receives a cricket ball? We have completed answering the question, what happens when A sells the cricket ball? Now we are on the third question. What happens when B sells the cricket ball to C? That's the question I'm asking. What happens then? Right? What's the answer there? What do you think is the answer? Anyone wants to raise their hands, wants to talk? Yes. Yes, Tanmay. Sorry, it looks like I'm not able to.
Yes, sir.
Sorry, 1 second, Tanmay. I don't know why I'm not able to see. So Tanmay and Rohil and Shiva have raised their hands, if I'm right. Yes, Tanmay, you go ahead. Tell me.
Professor, in that case, it will not be a taxable income for the reason that B is neither resident of India and the income which is generated in the hands of B is neither accrued or arise in India,
Right.
or it will
So,
not be received in India as per section 5.
Right. So exactly. So I was just going to, you just preempted me. Absolutely right. You are reading section 5 correctly. You're saying, in addition to section 4 and section 14, section 5 is another restraining factor on the Indian government's ability to tax income. If there is a non-resident who's earning income, there's no doubt he's earning income, but he's a non-resident who's earning income from a source that is not India, then he cannot be taxed in India. Right. So this is an important point. The B2C transaction that we're talking about here in the facts is not taxable because it's a transaction that is occurring outside India between two non-residents. Rohil, were you going to say something else or something in addition to this? So I got Rohil and Shiva who had raised their hands as well.
So pretty much the same thing, but also the fact that the website, the amount is generated in Cayman Islands, so being a tax haven. Even in UK, the tax will not be uh, accrued. Like he won't be taxed.
That's true.
Either.
It could be that the source of income is not even the UK. That's correct. Although it didn't matter in this particular case because A is a resident. That's a good point. This may not even have a UK source because it's generated in Cayman Islands. Shiva, were you going to say something else or something more?
Oh, so just I raised hands for the previous question only, sir. Not related to this.
Great.
Thank you, sir.
Okay, so that's the interesting thing. We have gone. So far we have learned the impact of Section 4, Section 5, and Section 15. These are foundational elements of income tax. If you understand this, you'll be amazed to know that the most complicated tax transactions you have heard of. I'm sure many of you have heard of the Vodafone tax case. Many of you have heard of other tax cases. These are complicated cases involving crores and crores of Indian revenue. All of them are based on tax planning, only based on Section 4, Section 5, and Section 14. And there's nothing more than that. So it's important that you understand these foundational elements for you to even understand how this works. Great. Sorry, did anybody want to have a question? Or
Yes, yes,
sorry,
yes,
who's that person? You have to identify yourself.
yes. I'm inside.
No, no, your name, please. Yeah.
No, I'm inside third wave.
Yes, Ram Prasad, is it? Ram Prasad, did you have a question?
No, prof, not yet.
Okay, okay, great. So now we have considered the first paragraph. Now I want the students to go to the problem question and read the second paragraph. Yeah, and this time I'm going to give you 10 minutes to read it. Second paragraph. And what I want you to do is I don't want you to look at the Tax Act. I don't want you to Google. No Googling, no looking at the Tax Act. The only thing you got in front of you is Section 4, Section 5, Section 14. Right? That's the only thing that's there in the note that's been given to you. Just try to answer just based on the only thing that's been taught in the class so far. Just based on that, just see how you're going to be answering this question or the tax consequences of the facts in the second paragraph. The second paragraph on note in note 1, which starts on page 3, which starts with A has a family that consists of his wife and only child B. That paragraph. Just tell me, just based on nothing else, a blank slate. I'm not worried about your tax knowledge at this point of time. Just tell me how you will address any tax consequences, potential tax consequences arising out of this second paragraph. Okay? I'll give you 10 minutes. I'll be back in 10 minutes. Yes, friends, I'm back. So, shall we have a discussion on what are the issues here? I'm just going to read out the, facts in this in the para again for you people, and then you have to tell me what the how you analyze this question, right? So, A has a family that consists of his wife and only child B. A is a seller of furniture and fittings meant for um, residences. In order to help B, A decides to withdraw some of the furniture from the business and give it to B for no consideration. B is a 100% equity shareholder, that's a sole shareholder in ABC Limited, an Indian company. B has bought ABC shares in 2006 for a total consideration of rupees 500. ABC exports jewelry to the UK. ABC has hired DEF Limited, a company incorporated in the UK, as its agent in the UK in 2006 on a fixed monthly commission basis in order to make inroads into the UK jewelry market. The contract has a clause that allows ABC to cancel the DEF agency within 2 months' notice on payment of a lump sum amount that is equal to a total agency commission earned in the previous year. In September 2017, ABC decided it was better off hiring someone else as their agent in the UK and exercise their cancellation option under the agency contract. In December 2017, ABC was liquidated and B received rupees 20,000 in cash. At the time of liquidation, ABC had accumulated profits of rupees 10,000. Analyze all possible tax consequences arising out of these facts. Now, I already have an answer here from Vivek Kumar Kushwaha, who says the furniture is withdrawn from the business, so it will be considered as sale and will taxable to A as business income. Next, the furniture was received by B, that's a son from A, the father. It'll be considered as a gift from a relative and will not be taxed. So, good answer, Vivek. Vivek, can you? Is it all right if I ask you to speak? I just want you to. I don't know if you're available to speak, but I wanted to ask you, or anybody else who wants to talk. Um, on what basis did you give this answer? What's the legal basis on which you give this answer? There must be a legal basis for it, right? So we're doing income tax law, and we are talking about. Yes, Vivek, please. Yes, Vivek. I think Vivek has raised his hand, right? Yes, Vivek.
So the furniture was withdrawn from the business. It was a stock of the business. And
Yes.
withdrawing the stock from the business, it will be considered as a sale of the business.
Why is that? Why is that? So you're saying somebody's in business. They got some inventory, as we call it, right? Whatever is the basis
Yes.
for sale and purchase. For a vegetable seller, vegetables are the inventory. For a fruit seller, fruits are the inventory. For a person who's involved in furniture, furniture is his inventory. And instead of selling the furniture, they give it to their son or they take it out. Why should there be any tax consequences?
Shall I answer? This is Shiva.
Sorry, Vivek. Only Vivek is answering this question. I'll call on other people. But Vivek, do you have? Why did you think it was a sale? There's no sale here. He's just taken it out. He has taken
Actually,
it out. And given
I thought it was withdrawn from the stocks. Actually, he's a seller of furniture. Then obviously that furniture was in his stock of the business. He withdrawn it from his business. That's why
Yes.
it would be considered as sale.
So it's not. There's no sale. There's no invoice. There's no. He's just withdrawing it. There's no. He's not. There's no market transaction. There's no customer. He's his own customer. Yeah? Somebody else had raised their hand. Uh, can you just raise your hand again, please? Because I don't know why my system, I'm not able to see clearly who's raising their hands. Okay, 1 second. Shiva, I notice. And who else other than Shiva? Hey, just give me a second so that I got it. I got it. So now, okay, finally I've been able to, I'm now able to get a hang of the system. Okay, I got, I don't know what this person's name is. Is it ad.n I've got here? Advocate Nancy Jane. Yeah, could you please talk, please, if you're able to talk? You raised your hand. I have a Miss Jane. Yeah, and then I have
Am I audible?
Yes, yes. Are you Miss Jane?
Yes, sir. I'm Miss Nancy Jain. I'm so sorry. The hand raise might have been a mistake. I did not wanted to put anything into the session. I
Oh,
was
no, no,
also
no.
trying to figure out the working of the Teams app.
Okay, no problem at all. No worries. How about Rohil?
Sir, I think that it will not be taxable. Withdrawing the furniture will not be taxable because this is a reduction in the capital of the firm. No income is generated.
Hold on, hold on. A reduction in the inventory of the firm, stock of the firm. See, when you say
Yeah,
reduction in
yeah.
the capital, let's keep those two things aside. Suppose the firm has got a building and they sell the building, or then that's a problem with the capital asset of the firm, or a plant and machinery. This is the inventory. This is what they buy and sell on a regular basis. So that's their stock, or somebody mentioned the word stock, which is also correct, stock or inventory. And you're saying since there's no sale, there's no tax. Is that how you're putting it?
Yes, sir.
Okay.
No income is
And got it, got it. Chakradhar, one final comment from you, and then I want to say a few things.
So the tax won't be charged because the main concept of income tax is there's an income, then the tax would be charged. In this case, there is no income which is being generated. Therefore, there's a reduction in the inventory. Therefore, tax won't be charged in the first scenario. In the second scenario, it is given to his son. So it will be considered as a gift given from a
No,
relative.
I mean a gift from a son's perspective, right? Son is receiving a gift, is what you're saying,
Yes,
correct?
yes, sir.
Okay, I got that. But I'm curious. Thank you, Chakra. I'll just move on. I'm very curious the way I'm actually intrigued by the way you people are analyzing these facts, right? Where are we at this point of time in my course? We have been talking about the foundations of income in and income tax legislation. And we have stated so far that what we have learned from just a cursory view of how Section 4 works and how Section 5 works and how Section 14 works is that there's a tax on income subject to some limitations on how income can be taxed. One limitation is the very idea of income itself, which we're going to talk about in a second here. And the other limitation is that uh, the Indian government must have some jurisdiction over it. And the jurisdiction is usually either based on residence or on source. That is, either an Indian resident must be earning income or somebody with an Indian source is earning income. And then the third limitation we have learned so far is that income has to be charged under one of the five heads. The salary head, many of us are familiar with, but there are other heads of income as well. Let's go back to the first limitation, which is the idea of income itself. That is, anything that we earn, not if we get richer, we get wealthier by various means, but not all of those means can be considered as income for income tax purposes. I give the example of a cricket ball landing in your lap. You are wealthier as a reason, you've got some wealth, but that doesn't mean that you have received income for income tax purposes. I mean, we have some hang of what that means. But there are other ways of uh, becoming or benefiting um, from wealth. So, for example, in the example I just gave you, I am a furniture seller, and I take the furniture out for myself and I transfer it to my family member. Well, I mean, I have benefited in some way, right? I mean, if I want to give my son some furniture, normally I'll have to buy furniture and give it to him, or I have to give him money and he buys furniture. Here, I've just made use of my own business. I've just taken furniture out of my business and given it to him. Haven't I, in some ways, benefited? Because I don't have to go to the market and buy furniture. I don't have to give my son money to buy furniture. I just take the furniture out of my shop. So, have I not benefited? The question really that's interesting, I think, is that whether this kind of benefit, this in some ways I've traded with myself, right? I'm a trader of furniture, and and I just give it to myself so that I can give it to my son. When I say myself, I mean to my family, right? And in some ways, I've traded with myself. Um, Suppose I have benefited from that, but whether that can be considered as income for income tax purposes, right? That's the question, right? And that's a question that we'll be answering next week. Not next week, 2 weeks from now, when we do our class. We have a set of cases that um, that is available, and we'll be doing that. Similarly, you see all the other facts I've given you. You know that ABC has got this contract with DEF, and then it canceled the contract, and then DEF received a certain sum of money. The benefit that DEF has received, is that subject to income? Similarly, if ABC is liquidated and B receives some money, 20,000 cash, is that liquidation amount subject to income? Right? These are all benefits that people have received, but we are not sure whether those benefits are subject to income at all, right? And to answer that question, we'll have to answer, how is income realized and what is the concept of income realization under the Income Tax Act, right? And that's the question that we'll be answering next week. I want you to read those cases that have been assigned to you. They're in your course materials, and come prepared next week. There are two more things I want to tell you. So I'll be going through this second paragraph when I meet you again, and we'll go there turn by turn, and we'll see how we tax those instances. In doing so, we are going to go back to that idea of income realization and what that means for income tax purposes. The one thing I want to mention, I've mentioned that you need to have access to the course materials, and those are the materials I have prepared, and with a lot of careful consideration of the issues we're discussing. So I need that. All of you need to have that on hand when you come to the class. And you must have access to the Income Tax Act in one of various ways. For me, it doesn't matter which way you have access to the Income Tax Act. One, you can buy the Income Tax Act. You will have to end up buying both the new act, the current act, and the new act. But the current act is what we'll be referring to, and the new act, we'll only be talking about it when we are referring to the current act. Or you can refer to the current act and the new act online. It's freely available online. It's available on the income tax page, on the income tax department's page. It's also available in the central government statutes page. If you just Google this, you will realize that all these acts are available. But you must have access to the acts in one or the other, and that's important for you to remember. Yes, sorry, you had a question. Please ask.
Hi, sir.
Yes, yes.
Sir, so you have taught us very well, basically, but you taught 100%. But I was thinking that we can go from basic, because I don't have any knowledge basically of taxation. I was thinking that over here the course will start from basic, like what is tax, what are the definitions, and all that thing. But I am not able to catch up that what are the sections and all that thing. So I am finding it a little bit difficult, but you taught us very well. But I'm just worry on that only, because I'm not getting that sections directly. I'm not linking up any like that. Uh,
You don't have to do that. So this is what. Sorry, I don't know why there's an echo. Can you just switch off your yes. Sure. So Yash, let me answer that question, and it'll be useful for the rest of the class as well to hear. Law has been taught in a very certain traditional manner in universities. We don't teach law in that manner at NLS, and we won't be teaching it in that manner here either. What we are going to be teaching you is from the basics. That is, we will be teaching you what is a tax. We will be teaching you what is income. We will be referring to section numbers and sections as and when they are applicable. All of that will be done, but it will be done in a conceptual and a principled manner, not in the manner that some of the students here may be used to. That's just not the way we teach. But we are not going to be assuming any knowledge of tax law, including this lecture. We are going to be assuming that you don't know tax law, and we are going to come back and teach it in this manner. So don't be worried about that. What you should be worried about, yes, is whether you'll be able to give enough time to this course. Because if you're not able to do that, then you should not be in this course. Yeah, that's very important. This course is not an easy course. It's rigorous. So it's important that that part of it is very clear to you before you even sign on to this course. But don't worry about the part about I don't know law or I don't know tax and how do I then manage. That's my problem. That's not your problem. So that I will make sure, and I'll also have revision sessions. So I'll
Yes, yes,
revise things. So I'll
yes,
make
yes.
sure that you do that. And one more thing before I go off is that you have in my course materials there is an introduction to tax, which as I told you begins on page in note 2 on page 5, and that will answer many of the questions here. That's a good important background material for you. I have written it, so that's something that you should take a look at as important background context material for you
Yes, yes,
to read. Yeah, and that
yes, yes.
starts with what is tax and what is income and all of those questions. And I'll also be talking about that in the next class. Yep. And one more person had raised their hand. Can you please speak, please? There's one more person. I just saw that somebody had raised their hand. So if okay, if nobody has any questions, we'll close the.
So I have a question.
Who's that?
So Rohil.
Oh yes, Rohil, tell me.
Sir, in this case, when A has withdrawn the furniture from his showroom and he's not paid any amount, this reduces his total revenue as well. And in turn, even if he generates a profit on the rest of his furniture, the sale of this item is not recorded at all. So his income reduces drastically because of this. So is this not something that has a framework around it, or is there some sort of legal implication as to how this should not be done?
Yes, I mean there's an important legal issue which I'm going to address when I see you people 2 weeks from now on this case. So the next set of cases that have been given to you are on this matter, on this issue. So
okay,
we'll have to create some suspense and make sure that we do this next 2 weeks later.
Got it.
Yeah. And Atul has raised his hand. Yes, Atul. Yes, Atul, go ahead. I can't hear you. Okay, shall we close for now then? We are at 11:04. So please do read the materials that I've asked you to read. And when I come back next 2 weeks from now, I will revise whatever has been stated in this class and then continue from there. Okay. Thank you, everyone, and see you 2 weeks from now.
Thank you, sir.
Thank you.